full circle. CoStar, rents. All right, Matt, you made a really good point. Sorry, I'm going to jump around. There we go. Sorry. Rents have been flat. Rents have been pretty flat. We've had the lowest rent growth this last quarter than we have, according to CoStar, which we had a whole debate over this CoStar data, because CoStar has no negative national rent growth since 2010, and we all know that there was some negative rent growth at some point. According to Apartment List, we had an extended period of negative rent growth, but according to CoStar, sort of going around, regardless whether it was negative or not, rent is lower. It's not. And I'm showing this because it's related to CPI. Housing, shelter makes up 34% of CPI. CPI is kind of the inflation gauge that most people use. Yep. The Fed uses PCE, the personal consumption, personal consumption expenditures a little bit more, but they still look at CPI. And this would show us that CPI would be coming down relative to housing coming down, which that data hasn't fully floated into the system. Yeah. But again, if we're looking at the multifamily data, and if there is a lag between this real-time data and CPI, this would show us that CPI would be receding at some point in the future, and there would be some correlation to rates coming down. Yeah, that could, as well.
That could be. I think there's also home price growth is starting to stagnate, maybe cool off. I just don't know how much of a lagging indicator the CPI is when it comes, especially to apartments. We've been waiting for things so long, and I also think that it flattens.
How much do you trust CPI?
I trust it.
Do you think it's like a real number, not something that's kind of made up?
Oh, I think that it's a real number if you cut out I just don't trust it necessarily with apartments, because I know a little bit too much.
But I guess and not trying to be like conspiracy theorist, but like, enough about housing, enough about apartments, and when you see the CPI numbers, you're like, this doesn't make sense. So how much of that would be true with other indrees?
I'm just it could be getting worse if they defund a lot of the data gathering from CPI.
Oh my gosh! Well, it's not like they're providing that good of data, Matt.
I guess it's better than nothing. I like it.
We've got plenty of data. They shut down during COVID.
Yeah.
I'm sorry, but they don't even provide good data. Do they provide good data?
Do
they provide data?
I think that it is in general. It is great. I'm just saying
that the one aspect that that is part of your job that you've been doing for years now, that you study, you look at it when CBI publishes their housing data, and you were like, this makes no sense.
It makes
right.
No, I try to fit it into my understanding so that they can still be right.
You try to square it, but I'm just saying. I'm not as familiar with, like the food component, and I don't track food prices on a daily, weekly, monthly basis. So I don't know how off they are.
I track egg prices, but only when it's politically convenient.
Exactly. So anyway, I don't know what I was trying to say there, other than if at some point real data trickles into CPI, and that if housing is a component relative to inflation, you would think that those metrics would be receding at some point in the future, and there's a correlation between that and short-term rates, and then maybe even long-term rates.
No, I think that's right. If according to what we see in the lags that we know about, especially with multifamily, there will continue to be a lowering of the CPI, so it'll continue to make the CPI.
But we've also been saying that for a year and a half.
I know, and that's why I don't. Yeah, that's. But I do think that it tends to flatten it. Like it was never as high as it was shown on the private trackers like here.
Well,
it won't never be as low as it
rent has been declining since halfway through 2022, right? And it's been lower for the last 2 freaking years, 2023, and we're more than halfway through 2025. So, and I mean, the growth has receded slightly, but it's still pretty elevated.
And I guess there's a difference,
no period.
Affordable housing, I'm not.
Sure.
I do think we are in an exceptional moment since 2023, and I think this period is weird. And it's upsetting, and it's very frustrating. That's where I was kind of coming to terms with this whole time on CoStar, is this temporal period from basically 2023 until now, where rent's roughly the same. I think that's more of a story than, year-over-year rent fell off by 0.3%. Yeah, that could be a blip, could not. I get it. We've crossed the threshold that we haven't reached since 2010, but it's not that big of a change. The bigger story is we've spent the better part of 2 years, with rent growth like the same, like nothing's happening.
Yeah.
And every year, and I'll admit to this, every year we say, oh, improvement's just around the corner. We just have to wait out this year. That was what we said in 2023. Let's just wait until 2024, and then in 2024 we said that
survive
rhyming,
until 2025.
we said everyone's famous poem.
What was the rhyme? And everything will be free in 23. What was
I
there?
don't know.
Were
I don't
there
think there
rhymes
was,
for 24?
I think that I don't.
Was it just survive till 2025?
Yeah, I think we knew, but it is well into 2025. The fact that things haven't changed when it comes to rent growth is worrying. It made me like, oh no. And then I looked at the context. I was like, well, it hasn't been as bad as it was so if you scroll back all the way to 2010, you've got negative rent growth. So when it was that low, there was actually a downshift. Obviously, it was a great financial crisis, housing crisis. A lot of things were negative, and one of them was apartment rents. And then there was actually also a period in the early 2000s where apartment rents were negative too. So it's not unprecedented that you have a cooling period, even negative. And it makes this period now look a little bit better, that it's at least not negative. But the fact that it's calm, like there's like the no wind in the air, and it's like it's almost worse than the storm itself.
I'm gonna mess up all this stuff. I'm gonna just while we're on CoStar. I mean, there's a reason. All things are relative, and this with this real page piece that we're gonna talk about in here in a second is highlighting, and I guess it's the counter to just looking at the data point of rents are low and they've been flat. Yeah, they have. It's because this has been happening. All of these deliveries have been taking place. We've been delivering more units than we have in over 40 years. Yet, despite vacancy rates are definitely high and rent growth is on the lower side, the fact that we are absorbing these units, we have,
like I said, it's not negative.
Positive absorption. And then again, this is just showing the starts declining. But I mean, how many starts there were in 2022 and even 2023, and then there's, I mean, this isn't a full quarter yet, but I mean, we're looking at the lowest amount of starts, the last couple of quarters in a decade or so. I mean, under construction. Anyway, I mean, what we're trying to say here is, yeah, rent growth is low, but it's amazing that, I mean, with CoStar's, the data that CoStar is at least purporting to be as true is that we've remained positive. We could build a 40-year peak in supply, deliver 1 million units essentially, and we'll still grow rents. Obviously, we're not growing rents everywhere. The Sun Belt is definitely seeing negative rent growth.
If there's anything that we've learned over the past 2 years, it's going to be a little longer.
Just be patient. Real estate is slow. One question
even CoStar expected last month. I looked at last quarter, and they said we expect rents to accelerate in this next quarter. Well, they kind of didn't, and so that's what's just frustrating.
And I think that we've talked about this idea of kind of the time dilation, time compressed, and things are just expanding and taking a lot longer than. But we accelerated like a decade's worth of growth within a year. So,
and when everything's the same, you do look for what is different, and what is different is the starts that are going down, the apartments under construction are going down. Actually, and a lot of what's different. So we looked over. That's the time period, and so that kind of reassured me, like, okay, I can see a way out when it comes to these things that are happening over time. I also looked at, because it's not fair, if you look at national, maybe there are certain markets, certain regions that are doing better. And I would argue this year, maybe more than others, that the national rent growth numbers are going to be dragged down by like a smaller number of markets. So it's the South. The overbuilding in the South is dragging down the national rent growth number, such that like if you look at the national average and you're living in Indianapolis or Cincinnati, that's not going to really mean that much to you.
It's meaningless. I honestly think that the only purpose of the national numbers right now is to get an idea of what CPI might be in like when an indefinite amount of time to forecast interest rates.
Yeah.
I don't see really a practical use for them other than to say of like, national rents are negative, but that doesn't really tell you anything, because you said you have to break down, drill through all the regional data to actually talk about real performance. So
Yeah, no, I agree, and that's one of the things I did just because I was going through this and just trying to find my way out again of the kind of gloomier numbers of stagnation. I took 7 sample markets with these are the markets that had the biggest amount of units that had negative rent growth.
Yeah.
So these are markets like Dallas, Houston, Atlanta, Phoenix, Austin, Denver, Charlotte. So those are the biggest high supply, low rent growth markets. So they make up 17% of the total inventory. But when it comes to the number of newly built units, they have built 26% of all the newly built units were in only, in markets that were only 17% of the inventory. So that's this outsized overrepresented basically when it comes to newly built units. But then when it comes to units under construction, that skew is a little bit less. So it's like the high supply, they're building a little less. Instead of 26%, it's only 21% of all under construction. Still, they're over, they're surpassing their representation.
they haven't all learned their lesson.
Yeah, yeah. And then I did the flip side. So the undersupply, or not undersupplied, I'd just say like kind of normal markets that have positive rent growth. The biggest ones, New York City, LA, DC, Chicago, Seattle, Philadelphia, and Boston. They had 23.7 of all the units just because they're bigger cities, but only 16% of the newly built apartments. So underrepresented when it comes to positive rent growth. And also the higher percentage of under construction units. So they were underbuilding. Now their under construction is 21% or almost 22%. So basically, the apartments that were building a lot, they're slow. Actually, their construction level is slowing down,
Yeah.
and the apartments that weren't building, their construction level is ramping up a little bit, at least relative to the nation. That is a positive sign to me that things are actually reacting.
They're reacting. I mean, there's little development equity anywhere in any regions, even in the growing regions like the Midwest. But if you think about, underwriting a development deal, how do you underwrite something when the current environment is negative? In the first 2 years, there's negative rent growth. And the story is we've just built too much. And then you're a developer going to equity saying, let's build some more. Yeah. And when you're probably going to, now that there aren't national and regional developers that can have some flexibility about moving to different markets, but there's a lot of local and regional developers that build in the same markets. And so they're going back to the same investors to build in the same markets. No surprise that it's the regional, local developers that can move to markets like that are in the Midwest and say, hey, look, our development project in Austin, obviously it's slow, all of the supply down there, but we found this market in Indianapolis. Yeah, they built a decent amount of apartments, but nothing compared to the Sun Belt. They're all getting absorbed. Rent growth has been positive. There's little supply in the market, and we can underwrite with data today positive rent growth.
And that makes sense. That should be how the market works. Yeah. I think people just got so psyched, so excited to build in Phoenix. Numbers be damned that we saw this outsized growth in that market.
When you start hearing people just quote seemingly important, and they are important, demographic metrics of there's X amount of people moving into Nashville every single day. Well, it's like great.
And I wonder, they built so fast. Maybe the data didn't catch up. They didn't know that everyone was going to build there until they knew it was too late.
100% that happened. I'm sure. I know that. Because this even happened to us, of where we're buying in a market and we're like, we've only been able to identify these new developments that are being penciled in, and then you see some shovels going in the ground. You see some report, or you talk to somebody, and they're like, oh, there's another deal that's being built because it's been flying below the radar. CoStar didn't know about it. It's not in any publications, and then there's a couple hundred extra units that are going in. They're going to be competition. That happens all the time, and sometimes it's just like the data hasn't flown through, or you haven't gotten the information. And again, money became free at a similar period of time. I mean, interest rates went to zero overnight, and it was in halfway through 2020, and that's when we saw this. Once people were confident that the world wasn't absolutely collapsing, sometime in 2020, basically 2020 got over. Everyone was like, let's start building. The money is free. And it took some time. I'm looking at 2021. All of these construction starts, 150,000. In 2020 is 100, then 150,000 the next quarter, 136, 124, 129. Then bam, 200, 188.
Responding both to demand, I think, and interest rates too.
Yeah, they're looking. Their interest rates are interest rates. Short-term rates are 0. Rent growth is,
That was about
8.
peak.
Let's go to the rent growth numbers. Rent growth at that period of time. Wow, this is just nominal. Rent growth was 9%, 8.5% per year. In 2021, end of the year is 9.2, and then it was 9.4 according to CoStar. Other sources have it even higher than that.
Yeah.
So then people are using these 9% rent growth metrics year over year. They're assuming they weren't assuming 9 and then 3, 3, 3, 3, 3. They were assuming 9,
Forever.
10, 11, and then maybe 8, 7, 6, 5, 4, 3. They weren't. They didn't have. No one had 10, 3.
Yeah.
Some people had maybe 10, 9, 8, 7.
Yeah.
But it was all none of it made sense. Add those percentages up. Wage growth isn't growing that fast. And so everyone saw all of this, and they all decided in the same year and a half, let's all build in the same markets across the Sun Belt. We all live in New York City and California anyway, and these down in the South where freedom reigns, we'll be able to do whatever we want, make a lot of money, bring it back to the Big Apple.
Yeah.
They all had the same idea. They sold it to their grandmothers and the pension funds. And let's see if we can have the delay. They'd probably have the. And so peaked under construction here in Q1 of 2023, and then we don't have the defaults or anything on this page. But man, I'm skipping around. Is there CMBS data? And looking at these origination LTVs, I mean, obviously very high leverage. February of 2022, and obviously when started getting sucked out of the system. Let's see these maturity dates.
That's only future.
This is only the future.
Yeah.
A lot in 29. Anyway, they don't have distress, but Matt, there is a couple articles out. There are the amount of just foreclosure sales in Texas this last month was insane. There are a lot. There's a lot of there's decent amount of distress. A lot of the chickens are coming home to roost.
But so that was like